Ladies and gentlemen of the crypto space, we're live on a Monday, March 4th at 11:30 a.m. I think I'm going to stop using the green screen, go all natural, so to speak. I got my youngest daughter's artwork in the background, nice and simple, new format. I like this, getting comfortable with it. Look at this day, look at this price action. Money is not what you think it is. And these flows are significantly altering the valuations of money. The valuations of money are relative. Everything is supply and demand. Money is, in a sense, a type of asset, and that is to be considered in the context of other types of assets, equities, crypto. Things can have properties that span across different terminologies. Equities have yield, they have price action, they have inflation, they have deflation. What do you think a share issuance is or a stock buyback is? It's basically monetary policy. We're very much accustomed to these types of properties or inspecting this reality in the crypto space where we have inflation or emission rates. And that is not something we used to inspect with regard to the meat space markets, but in crypto markets, we look to the emissions schedule. We want to see that it's a decaying inflation rate where things are fixed supply and we're concerned about supply. All of it will be overwhelming. It'll drive you nuts, which is why the methodologies we've talked about over the years have been so helpful to find comfort as these prices are behaving in extraordinary ways. They're behaving in extraordinary ways because they have different amounts of supply. Bitcoin is a very low supply asset. Obviously, it's fungible, so there's a lot of subcomponents. But from a psychological perspective, that is meaningful. Why do you think memes are meaningful? So the psychological inspection of 21 million supply minus all the stuff that's been lost, considering its inflation rate and the demand, there's a supply and demand imbalance. And frankly, that supply and demand imbalance is going to get even more ferocious after the halving. So this is one heck of a setup. We have never seen a cycle like this, which is understandable. We've never seen passive flows into an asset that has a deterministic inflation rate. This is unique, probably in history, and that's something that is indisputable and arguable. It's real. And what does that mean from different perspective? What does that mean from a capital management perspective? What does that mean from all the perspectives that you could possibly consider? So put your questions in the chat because as much as I could ramble about what is money and the differences between crypto markets and meat space and the similarities and comparing the stuff to emerging markets, the most important thing I try to explain to you is things that help you understand how to not only digest what the market's doing and why it's doing it, but how do you navigate the market? How do you engage with the market? Because I remember years ago when I was younger, and you see these things called percentage signs, and you see one going up and one not going up. And I remember vividly chasing percentage signs, and that's something that you have to get past that. You have to be comfortable, and to be comfortable, you have to understand what a market is, which is really kind of expressed with the intro to the today's stream. So that's why we talk about what is money, what is currency, how does money make currency, what are markets, what are emerging markets? What are passive flows and why are they affecting the price in this way? Why it's different this time, how it's not different this time. There are many things that are completely not different this time, and just as many things that are extremely different this time. It's important to understand the 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 list of shit that's different and the list of shit that's not different. Otherwise, this bucking bronco is going to throw you off the horse. You're going to be chasing something up 40%. It's going to go down 20% when you should have kept the original thing that hasn't moved that's up 0%. And a week later, it's going to be up 50%. Don't let it drive you nuts. I told everyone for the last 2 years this market's going to do what it's going to do, and I'm going to be sitting here cool and calm. I've also said I'm not going to outperform. I'm not going to chase anything. I'm not going to extend out of my comfort zone because I have determined a comfort zone that is sustainable. I've determined a comfort zone that is reasonable, rational, and correct. And I knew that this comfort zone will not outperform, but it's okay because I don't need to outperform any longer. I just need to do well. And that outperformance, like look at Bonk. Bonk is crazy. 51%. This thing's running. I mean, I literally get like dust from Hero Network and that thing and the Solana and the Bonk and the Bonker. It's just fascinating what's going on over in Solana. Y'all thought Solana was going to go from $8 to $120 and nothing was going to happen on the network other than meme coins. I think the best is yet to come. I think Pepper Dex is going to be interesting, and I have primarily exposure to mainnet. So what am I going to start exposing myself and excessively diversifying to the potentially interesting things on Solana from a foreign exchange perspective, the DEXs, the perp exchanges? No, I don't have the capital to acquire the size, the position size I would need. So what I have is the core of the Federation, the Hero Network. And then everything and anything that's pretty much meaningful on Solana is going to be driving revenue to Hero Network. And it's not, I'm not even thinking of Hero from this cycle. Check back in 2032. Check back when Solana's processing, you know, $100 billion a day in transactions, notional. So it doesn't even have to have that amount of capital, but the amount of activity, amount of leverage, and all of that drives fees. That's going to be quite fascinating. I think it's going to be a perfect example of a relatively modestly sized position that becomes a meaningfully sized position. And that's the biggest one of the biggest things folks misjudge in position sizing. You want 1% to 10% changes everything. And stop trying to make all the money in one cycle. And I understand one cycle, a year and a half, maybe 2 years of ridiculous market activity, and it's become pretty predictable at this point. And then you have 2 years of just down, down, and down. And I understand all this stuff takes 4 years, but if you're in your 20s, stop trying to make it all in a year. Ta Take 8 years and check back in the 2030s and you won't even be 30. If you're 20, you won't even be 30 in 8 years. You'll be 28. You're not even in your 30s. Stop trying to make it all in one shot. Instead, digest what the hell this is and why it's such a big deal. And then when mom and pop ask you what you're doing, it's not the memes and the bonks and the Doge coins. No, it's you're talking to them about the stuff that we talk about: monetary policy, emerging markets, capital flows. What is money? Oh, you did, mom. What is money? It's not what you think it is. I mean, I my statements about money are very consistent with what the major macroeconomists talk about. And obviously I put my own flair, my own spin on how I tell the story. But dollars aren't money. They're not. The bonds are money. And Treasury prints bonds, and then the world has to buy the bonds. And if the world doesn't buy the bonds, and over the last 15 years, the Federal Reserve bought the bonds. And but that they don't want to do that this time around. That's called monetization when the Fed does it. And that's basically directly increasing the money supply. But when the rest of the world does it, it's not increasing the money supply. It's just the whole misguided thing of 2020 and 21 and 22 about printer go burr at the Fed. was so off base about how the system works. And this, where is it? Where is it? I got it somewhere in here. Here it is. This is so off base on how the system works. It's base money, but people don't use base money. People use liabilities of base money. People use basically derivatives of treasuries to create the vast majority of money in circulation. So if everything collapsed, it collapses basically to here, the $5.8 trillion. So this was a massive deleveraging. When this goes up, they're deleveraging the system. That's how many dollars are in circulation, how many currency units. And that's why it's so weird that most people don't understand. They see this go up and they're like, oh, they're inflating the supply. And it's not that. It's not. And that's what you're missing about navigating the crypto markets effectively. You're looking at things the wrong way. This going up is a deleveraging because the money was already printed, or the dollars, the currency was already printed probably decades ago. This is, Mike Howard talks about like $270 trillion worth of liquidity in the system, which is not the same as currency. It's a capacity to manifest currency in one way, shape, or form. But whatever it is, it's not 5.8, and whatever it is, it's not M2 at 20. Whatever it is, it's in the hundreds of trillions of dollars. So when they increase money supply from 3.18 to 5.84 currently, it was already printed way before probably you were even born, probably in the 80s, maybe the 90s. It's already printed a long, long time ago. So understand that. And then you can understand why it's interesting, um, why these markets are attracting capital flows. How is money created? And it's basically credit. It's a derivative of a fundamental money. It's a liability of money. And it's an IOU for a dollar. And that's the biggest business on the planet. So that's where I look to in the crypto markets for what's the biggest business in the crypto market. If it's the biggest business on the planet, it's surely going to be the biggest business in the crypto market. It's credit and foreign exchange. Because what are you looking at with the Bitcoin flows? You're looking at the flow of dollars into the ETF, but in in one way or another, it's appreciating the price of the Bitcoin unit. So that's a foreign exchange transaction at some point from one denomination to another. $66,395. We are above first wave peak in, you'll see it more on the monthly. First wave peak in April of 2021. I don't like the monthly chart too much from a Bitcoin perspective. I appreciate the 3-month chart much better. But this looks very promising from a continuation perspective. It's not much of a run thus far. Now, it's meaningful to inspect from a total market cap perspective because as Bitcoin gets to where it is, has gotten to where it is and where it's heading, it makes a statement to the world, and it will continue to draw in capital because of that. It's establishing itself more and more. As this price goes up, the flows go up. Flows beget flows. It's the way emerging market flows work. An emerging market that is growing and expanding will attract more capital inflow. Now, we can consider Bitcoin a type of base money. So it's not akin to dollars at all, in my opinion. I don't want to get too much into a Bitcoin maxi type conversation, but I do see it as suitable as a base money. There's not much of a network for it to create currency, which is its biggest shortcoming. But there's much more of a network for Ethereum to be used as a collateral for a currency, as a money to create a currency, and especially the other gas tokens. And that's why the DeFi markets broad terminology, DeFi encompasses everything from what you expect to stuff like Dot and Atom and stuff that's more out on the fringes of DeFi, not just Ethereum, Solana, Avalanche, Phantom even. Um, but that those yields, those percentage yields, have a psychological effect on the market, and it incentivizes people to borrow and leverage and use credit, and that increases the endogenous currency supply. One of the biggest printers of currency is the general public, and that's one of the grandest misconceptions of the narratives of 2020, 21, and 22 with the Fed is the printer of money. It's not just the Fed, it's you, it's me. It's every time you swipe a credit card, that's increasing the money supply. Every time you borrow an AVE, every time you borrow CRVUSD, it's increasing the money supply. And it's not necessarily as bad as you think it is. It's more complicated than that. And you have to understand why. Why the big stories that everyone told about it's all about the Fed and all about they're going to cut interest rates, they're going to do QE, and why that was all not even remotely useful or meaningful. In some regards, that's jet fuel. They have to print $10.8 trillion in 2024 plus fiscal deficit spending. So by some calculations, it's about $13.9 trillion. Now, if the rest of the world buys that, okay, it doesn't do much right away. In fact, it's deflationary right away. Oh, shit. In fact, it could be quite deflationary right away. It takes time for them to buy those monetary units. But then if then they cut interest rates at the end, maybe a quarter or two, 3 to 6 months after, and that's really like Q1, Q2, 2025. That's when that money is incentivized to be turned into currency at a leverage of 10 to 50. So we're talking about sometime in 2025, there's going to be 130 trillion to a half a quadrillion dollars added to the global monetary supply at some point. And then so that's not now. Right now, what's occurring is a repricing. We're merely at the repricing of flows, sniffing out where the destination of capital will likely be, to what market. And this is front running a wall of money that nobody's ever seen. No one's ever seen. Unless we have like an extraordinary deflationary event, like just something collapses, but they're gonna have to they'll have to paper over that in some way, shape, or form because that becomes contagious. And then it goes even further. There's only one destination for this, and that's what we've been saying for years. The destination remains unchanged. It's the path that's uncertain. What does that mean? So if you're going from home to a city, you take a couple different paths. You could go over a highway, you could go in a tunnel or whatever, or you could take side roads. Still go into the city. The destination's the same. The path could take a couple of different routes. So right now, this route that we're on, it's the 20-minute route, 20 minutes to the city. And there's two other routes on the map, the Google map. One says 59 minutes and the other says an hour and a half. And we're on the 20-minute route. We're on the good route, the favorable route, where there's no accident or no detour. It doesn't mean the detour doesn't pop up on the 20-minute route and turn it into 2 hours. And now all of a sudden, the 59-minute route looks pretty good. And frankly, even the hour and a half route still looks pretty good. Still going to the same destination. And that is what needs to be understood. And that's why our conversation started in 2020 and 2022, 2023 was the same conversations. And those were the discounts. That's when the discounts were available. Because the discounts are no longer available. It's imperative to understand with regard to position sizing and trying to You don't buy this shit. This is the last thing you buy. This is done. Somebody owns this at 95% cheaper and is going to unload 20 mil, 50 mil, and then it just changes the directionality. Because at some point, everything that's not bolted down is bought, and then the contrary happens. Everything that's not bolted down is sold. We better sell it before there's no value left. And the cascade occurs. Right now, the cascade is up. If I don't buy it now, I'll have to buy it at a higher price. The other scenario is if I don't sell it now, I'm going to be forced to sell it at a lower price. And that comes, it's inevitable, it's destiny. So you be ready for those types of things. And with the portfolio structure that we talk about, how we break down cash and investments, we're going to be nicely structured. What I'm most fascinated about actually is why Move hasn't crashed yet. And this is really indicative of this being a repricing zone for Bitcoin and for basically everything. Everything is just literally it's a mean regression. A mean regression from the downside to the upside. Mean regression, the average price over a long duration of time has gravity. Things return to the average price. So if you're deviated to the upside, let's turn off the log chart. Let's go on the monthly so you get your craziness. If you're deviated to the upside, brush. If you deviated to the upside, you return to the green line. The time weighted average price. Deviates to the downside. It returned to the mean right here. Then you had a really big deviation to the downside, but look, it returned to the mean. Here's your return. This is your mean regression. Stare at it, understand it. Deviate to the upside, you blow past to the downside, you go back to the mean, you go down, you go up, and the breakout and the retest, that's your directionality change. When you see a resistance flip support or a support flips resistance, we're early to talk about support flipped resistance. I don't think we're going to be talking about that for another year at this point. This is a wonderful chart to look at to understand mean regression from the upside as well as from the downside. Look, curve punching through. Quite refreshing. This is probably the most hated coin in the entire crypto market. And is punching through the time weighted average price on the monthly. This is the first interaction with the time weighted average price on the monthly, or at least breach of it to the upside in years. And what do you think? Anyone who's doing what they're doing with Bonk and all the capital inflows are inspecting what happened in 22 and 23 with regard to social media and the narratives, which were absolutely ridiculous uh, uh, and just hyperbole, exaggerations, big bullshit. And no, price is going to do what the price is always going to do. It deviated from to the downside for a long time, and it'll deviate to the upside. And I remind everyone, I don't really care where things deviate to the upside. It's going to go wherever the hell it's going to go. I wouldn't be surprised to see Bitcoin at a quarter mil or higher, but it's irrelevant. It's irrelevant to the cash part of the portfolio because it's going to have to get sold, and there's nothing to attach to, nothing to. I need to own it. Get rid of it when the time's right, and the time's right when Move blows out to the upside. But Move hasn't even crashed yet. Some point it has to crash, otherwise the whole system doesn't work. The whole system requires this to go down. And this is where they print the money. 100 trill to a half a quadrillion. That's where it gets funny. That's where it gets strange and weird. And then we finally see the resistance flip support, the candle breach, but we haven't even seen the moving averages come down yet. We haven't even seen like a death cross of a 50 SMA, 200 SMA bearish cross. This could be 9, 12, 15 months for this type of for anything to move on the monthly. Takes time for these types of charts to adjust. If it's gonna be really weird if the stock market keeps doing what it's doing. I can't believe they literally fiscally printed through an entire business cycle, especially from a banking perspective in March of 2020. What they did with the FDIC and the BTFP. But we're heading into middle of March. The BTFP is about to evaporate, and the path might get a little bumpy. Very curious to see what happens. Let's hit the questions. I had a question early. I didn't see it, Bill. You have a good day as well. But we'll be here on Friday this week. Bitcoin at 66 is insane. Drew, that sounds about right. But it's just repricing. It's just there's the passive flows and there's the supply and demand imbalance. I'm not surprised. I adjusted a bit of the portfolio from Ethereum over to Bitcoin, not necessarily because of outperformance. I think Ethereum does outperform at some point. It's just I think there's interesting potential for Bitcoin to do what everyone has always thought it can do, is significantly outperform because it has a different spot, especially now with the ETFs. It has a different spot in the global narrative, and that's meaningful. And that's okay if Ethereum underperforms. You still need it to engage in financial activity. So at some point, it'll catch up and likely outperform for the same reason Solana's outperforming. No difference. Tapsy's in the house. Brian, good morning. Sam, passive flows. That's about right. Athletic concept. Hey, hey. Diego, how do you determine premium or discount? Thinking about Prisma. So it's a good conversation, particularly with regard to Prisma. So you have to consider its emissions schedule. Now, its emissions are coming down. It's disinflationary. Also looking at Spell, which is doing very well, and what it's doing on Blast and potentially Barachain. It's quite interesting, given that it's the epitome of a credit system in the crypto markets. Also, RAM has been doing very well, but let's look at Prisma. Prisma's getting hammered nicely. Um, its emissions will come down further and further, and got an integral part of the system that's being recycled very nicely, especially by convex. Um, let's take a look at what its yield is doing if it decides to load. What's its 34%. Now, that's a hell of a return. So they're paying you for the risk. And there's a lot of risk because if you look at the vaults, if these vaults are not incentivized adequately, then it's possible that the stable coin will want to be redeemed. And if it gets redeemed, it becomes difficult to manage peg. And there's a variety of complexities. It's not easy to manage the peg of a stable coin. So this is a redemption model. This is a liquidity model. And, you know, I'm not too fond of an excessively sized position. I'm not too fond of the redemption model. It didn't play out with liquidity very well. And I look forward to their new version. But I'm much more fond of Curve's Llama from a stablecoin perspective. The redemption model works because it protects the integrity of the infrastructure, which is a shortcoming of traditional finance and bank liabilities, which are bank stablecoins. And that's not what they do. They don't protect their infrastructure. These systems do protect their infrastructure. But a redemption model is very brute force, whereas a smooth liquidation and repurchase model from the llama, that is a whole nother level of a stable coin. It produces a much more palatable product for creditors to interact with. They're much more protected. It's a much more stable and smooth operation of the infrastructure capacity to protect itself versus offering a product for credit consumers. So it's a superior product as compared to any system that has a redemption model. Now, bear in mind, we will see weirdness. So there's no reason this should not outperform at some point, just like my expectation that spell outperforms at some point. It just needs to catch a bid. And then the directionality shifts, it reverses, and and then sometime in 2025, and potentially if the path gets frisky enough in this year, we'll see how resilient the system is. Resiliency is everything. So when you're talking about core positions of the portfolio, you want to make sure that you're the most resilient. And that's something the biggest reason why I won't outperform. I'm not looking for the greatest outperformer. I'm looking for the greatest resiliency. I'm looking for the thing that protects me the most, protects the core of the portfolio so I can have large size positions, few large size positions, concentrated positions. So I wouldn't do that here. Bear in mind that's me, and bear in mind I'm not looking to outperform. The amount of MKUSD and Ultra at this point is quite attractive. It's an incentivized credit system. So it's understandable why so many folks are engaging with it. I don't take credit. I don't do leverage, and I I just don't. And then but I want to facilitate and extract capital from persons that do. And I just don't see for myself this as a position that I could oversize. Simple as that. Hope that helps. So, discount versus premium. Certainly at a discount currently, but discount versus premium isn't the entirety of the equation. You also have to consider the risk profile. You have to consider its trajectory, its potential, and it has potential to be just as significant as we saw liquidity, except it is broader. Obviously, there's varying collateral types. Obviously, there's greater integration with sterilizers and recyclers, convex in particular. And that's meaningful. So that affects the equation, and all of that affects the equation for assessing position size. And for me, I skew towards the smaller position size for what it's worth. Um, could be at a premium compared to other metrics. So it's just a matter of PA or no. Yeah, but it's also a matter of the risk profile and how comfortable you feel with the nuances that I described. How you haven't seen how well the redemption model handles the downside. What happens when the credit is being returned? And, I mean, liquidity had complexities with regard to redemptions, and redemptions kept going higher and higher in the collateralization ratio. So I'm inclined to think governance is adaptable here, a little bit more flexible as compared to liquidity was, but it's still relatively rigid. And that's the thing that intrigues me the most about crypto protocols. It's deterministic malleability. Deterministic mutability is that's an interesting statement. Uh, so it's a protocol that's adaptive deterministically, and the parameters in which the protocol can mutate are not mutable. So it's going to mutate in a predictable fashion. And to me, that's the most advanced of the crypto protocols. Ain't Anisette. Nice start of the week. Yes, indeed. Good start. Well, why you said Curve is the most hated coin in the crypto space. Remember 2022, 2023, especially the beginning of 2023. It's got to be the most hated coin. The hyperinflationary decay of the protocol when it launched, everyone hated the hyperinflationary decay. The emissions were too high. The emissions were too high. And now that you literally have CRVUSD and what's become the marginal revenue share from transaction fees, and now that you have a potential positive cash flow considering emissions, I don't consider emissions part of the cash flow equation as a traditional company. I see this as a deficit spending nation more so than how you would inspect the structure of a company. But it's on the verge of being cash flow positive considering emissions, which is okay. No one ever thought that was coming, but it's coming. And in August, it's going to be there. It's going to be receiving more income and distributing all of that income as compared to the amount of supply increase, the amount of curve that's entering the market. And that changes everything. Now it's a whole different balance of supply and demand versus incentive cash flow that incentivizes supply to be absorbed. And if you combine that with the sterilization pressures of the recyclers, of literally just convex, yet alone all of them, Napier is coming online, and the 2 dozen other protocols that are sucking up, hoovering up supply, it's going to be a relatively illiquid asset. What started as the most hated because the emission schedule is hyperinflationary, and there was excess supply everywhere, is going to become relatively illiquid. It's going to be weird. And I certainly want front row seats to that weirdness. Hope that helps. How do you think about living expenses cash for the next 1, 2, 3, 6, 12, 24 months? Do you store everything in your fave cash? How do you split? So my management of capital breaks down to 2 things: cash, investments. Investments are in cash. To me, investments have zero value. You cannot sell them. You could track the market cap for the fun of it. It's like looking at Forbes net worth type stuff, but you can't sell them. So that's the most critical criteria for an investment, in my opinion, is something that you cannot sell. It's something that you own, because then comes all the stories we've told over the years about wanting to be a business owner. You're not thinking about selling your pizza shop when the property values go up or the revenues doubled, and all right, now it's a good time to sell my pizza shop, or you whatever, your laundry business, or pick a business. And all a business is something that produces cash flow. So for me, I accumulate businesses that produce cash flow. And it just so happens, I think these digital crypto businesses dealing with foreign exchange and credit are the biggest businesses on the planet, unlike anything that's available on stock markets in any regard. So I think of these as investments. I never sell my investments. I don't want to sell I don't. That's why I think about what the next macro bottom is. And that's why the next investor season is end of 2025 and especially 2026, which will probably bottom in 2027 at some point. So that's when you look for investments. Now is not a time to look for investments. Investor season is done. Everything has repriced. Now, from a cash management perspective, all the businesses produce cash flow. Okay, do you denominate your bank account in euros, yen, dollars, Bitcoin, Ethereum, gold, what have you? So, how do you manage that? Well, that's the traditional business of a forex trader. So, what's outperforming? You could pile into the fastest horse. You can diversify to a degree. I retain some Ethereum because I need it to transact. It's literally the required monetary denomination to engage with transactions in this emerging market. And how do you size that cash position? I define Bitcoin, Ethereum, stablecoins, and any gas token for that matter as a cash. How do you size those positions? You have to identify attributes. And those attributes, for instance, Bitcoin, there's plenty of interesting reasons why it could outperform Ethereum. And the Ethereum Bitcoin spread doesn't do so well. Maybe it breaks down before it breaks up. His, what, what is that pattern we've called it over the years? The fake out breakout pattern breaks down and then it finally breaks up. But look where it starts to break up into 2025. So, I mean, that's literally a random line drawn on a chart, but that line does tell a story about a potential path. So that means you want to size your cash positions accordingly. But the cash always has to rotate. At some point in 2025, when Move finally blows up, and it hasn't even broken down yet, and the DXY finds some sort of structural bottom, 95, and it's barely a bottom, and it starts to tick up, and you see the higher high and the higher low, you're out because everything in the planet, it's all relative to dollars, and the dollar is the strongest currency on the planet, no matter how much people hate it, or no matter how much people think that it's going to zero, or it's worthless because the Fed prints them out of thin air. The dollar will go back up in value. It always does. I show everyone this chart every now and then. Dollar, oh, from November of 2021 to November of 2022, in 1 year, the dollar appreciated 343% against Bitcoin. Obviously, it's relative. So the Bitcoin depreciated and the dollar is the base unit of account. But the point is, this means something. And this means at some point when the conditions are right, the dollar appreciates versus every other foreign currency, every crypto asset, and it's your point of reference. It has to be. If you want to survive and navigate these markets, the dollar is your point of reference. Now, fortunately, if you're not in the United States and you're anywhere around the world, you could deal in dollars, and every stable coin in the crypto market is predominantly dollar denominated. So there's your dollars. So navigate accordingly, protect your cash, and invest when there's a discount. Very, very few, if any, remaining discounts because everything has repriced off the bottom. Asarco, hey, hey. Um, where was I? Jordan, are you invested in Prisma? I acquired when Prisma launched. There was a drop, an airdrop, and it was producing some meaningful returns, like 1,800%. So my position was a freebie. I did not buy my position. I grew my position, and it is just I have not purchased any. I don't intend to. I don't plan to. Uh, can it do very well beyond my expectations? Sure. Do I need it to? No. I'm not going to force the position. I'm certainly not going to oversize the position, and the position will be as productive as it is. My general sentiment for investing is it needs to be a damn good investment. And I've gotten very picky over the years. A lot of me now is not what I was in 20 and 21. I was much less picky back then. But now, unless it's like, holy shit, this is an interesting position, it's productive now, and it'll likely be more productive in the future, according to XYZ investment methodology, I'm not going to buy it. And that's okay. And that's okay if Prisma goes 10x on the money. I don't see it, according to my methodology, as something I want to oversize. It's very hard for me to oversize a position. Food for thought. Food for thought. A common narrative on crypto Twitter seems to be that this is the last easy money crypto cycle due to increasing laws, regulations, and we'll never have another life-changing opportunity again. What are your thoughts? Okay, so check this out. I like this topic. Increasing laws and regulations. In which country? Which country does it matter? Is crypto of a country? Crypto is an emerging market accessible to all countries of no country. It exists everywhere simultaneously. So regulations and laws are going to be weird going forward. It's not as clean cut as people think because these systems are not a traditional business. but they have characteristics of a business. These systems are not a traditional security. They have characteristics of a security. These assets are not traditional assets. They have characteristics of assets, of money. They have moneyness. They have attributes of equities where there's cash flow and yield and revenue that gets distributed, but they're not equities. So it's money, but it's not. It's an equity, but it's not. This is something different. It is different this time. And I've been saying that since 2021. 2020 was just a free for all. We're all trying to figure out what the hell's going on. But since 2021, I clearly saw these things as businesses. Businesses of no country, yet accessible to all countries. And the businesses are dealing with credit and foreign exchange, which are businesses that were that are traditionally the responsibility of banks. You can't own this in equity form. You can't own a bank. You cannot get revenue from providing liquidity to HSBC or Bank of America. This business doesn't exist in traditional finance as being accessible to us, the people. But in the crypto markets, these businesses do exist and they are businesses. So you can't think of them as businesses. And when you own certain investments, scroll back to early in the stream where I described the difference between cash and investments. When you own these investments, you own a business. Reminds me of what Buffett used to say is when you own a stock, you own a company. Oof, yeah, but things have gotten weird since Buffett was young and sprouty. Thoughts on Zcash? Probably more hated than Curve. Yeah, certainly is. Zcash has a lot of potential. I know a lot of folks that are still interested in it. I don't need it. It would be suitable for the cash position. I'm more interested in Zcoin, which doesn't exist anymore, which evolved into what's called Firo. Firo. So Firo is one of the few remaining masternode implementations, and it's not on the radar. Zcash isn't on the radar. It could be interesting. So that's just something that's a legacy ownership, a masternode I've run for the last like 6, 7 years at this point. So Firo's still interesting, and certainly Syscoin. Syscoin has done very well. These old coins, these old positions. Syscoin broke through the 50 SMA on the monthly, well above the time weighted average price. Structurally, all the way back to 2016, higher low, higher low, not even marginally a ceiling. So obviously, you can draw a bit of a trend line, and it's a very inarguable structure like this. That's clearly a bit of a horizontal line. So you got a monumental ascending triangle. That could be quite interesting. So this is something that I have a high opinion of, given that it is the most advanced Bitcoin DeFi platform. EVM. The EVM is the biggest thing that ever came out of Ethereum. It's not the Ethereum token. That is being myopic, seeing the Ethereum token asset as the most important thing. It's the EVM. The EVM is everywhere. It's everywhere. And the EVM is on Bitcoin. Vis-a-vis rootstock, vis-a-vis Syscoin, particularly Rolex. And Stacks is hot, obviously, so I've been watching Stacks for all this time. Where the hell is it at? But it had its big run. Look at this. It's up 1,400% from bottom. Can't own, there's nothing you could own here. And Alex, this is obviously the monthly chart. Zoom out to the daily, had an 1,100% run. It was months ago. At the beginning, end of 2023, Q4 2023, to even want to think about these things. And I don't want exposure to this. I don't have a high opinion of the Stacks ecosystem. I have a higher opinion of rootstock and Rolex that could inherit the extent of all the applications that are available across the EVM space. with very little, if any, modification at all. So that's my thoughts about the old stuff, Nexus. You bring up the old stuff. Brian, how would you handle fresh access fiat capital at this point in the market, increasing cash positions while waiting for corrections? Cash. The only way to navigate this market as of now, in my opinion, is from an FX trader's perspective. You are attaching to the fastest horse. You're rotating, which means you're using your stop losses and all your useful tools from a trading perspective. Investor season is over. The discounts will come, but you have to wait till the end of 2025 and into 2026. The discounts are not now. No, you know, and I know folks aren't going to necessarily listen to me in that regard. Look, Frac still didn't even come out yet, and it's been hovering at $9. But here's the complexity: who owns it down here in the 280s? Potentially a fair amount of people. One and two. Where's the next structural lower low, or the next structural low for that matter? So big breakout, and you don't buy it now, and you're getting in the 20s. So let's zoom out. Let's not do that. Zoom in. Get the brush, and you get some big ridiculous rally, but it rolls over, and that is probably where it goes. And then it rolls over again for a resistance holding as a resistance, and it double dips. And that's like heading into wherever this hell in the chart is maybe like 26. This looks great to me. Now, this is going to drive new folks in the market mad. That'll drive you mad if it crashes down to $18 from $250. But that's a very healthy chart, because $18 compared to $9 is a 100% increase in the asset's price. Now, you let time do the work, and if you bought it at $2.80 and it's at $18, you're up 9x on the money. And then the next cycle, heading into 28, 29, then it just gets gross. So this is why I advise 20-year-olds to think in 8-year time frames. Take your time, and you'll be done in your 30s, and you'll have learned how to navigate these markets. You'll have learned the difference between cash and investments. Break, resistance into support, higher high, do it again, and then there's your breakout, and it just gets repriced to a higher level. Let it take 8 years. Stop trying to force it, and you got to learn a week. Stop trying to force it in one cycle. You're not going to make it in one cycle. Nobody makes it in one cycle. You lose everything the first cycle, and then the second cycle, you're like, all right, fine, I got to do it differently. Second cycle, you make capital. You don't necessarily protect as much as you want to, because you don't follow things like move in the DXY and the bond market to understand where top could be. And then the third cycle is where you make multiples and you retain your capital. So 3 cycles. I saw a post months ago at this point, but that post stuck with me that it takes about 3 cycles to make it in crypto markets. And that sounds about right for a variety of reasons that I just explained. Hope that helps, Brian. I don't want to chase, but I am itching to raise my limit orders. Thoughts? Eh, well, cash management, sure. Investments, not necessarily. For instance, here's another consideration that hopefully will give you some context. So Bitcoin is literally approaching 67,000. It's like 2 inches away from blasting off through an all-time high. You get a nice short liquidation, you go into 75 real quick. So zoom out. Does this chart make sense to you? You go up to about a quarter mil, and then you break down in 2026 to right about there. So that looks basically about right. You're marginally below previous all-time high. This is capitulation. Everyone's deathly afraid. Everyone's running for the exits. It's going to keep on going. But look where it was back here in December of 2022, marginally lower than the previous all-time high. So this chart would make a lot of sense. And guess what? If you buy now at 69 and it crashes to 54, you're not going to necessarily understand. But if you're up here at a quarter mil and you're following, the macroeconomic liquidity indicators, what's the Fed doing at the balance sheet level, what's the bond market doing, you can get a sense of when total systemic currency supply is starting to roll over. And when the currency supply rolls over, when the dollar gets rare and scarce, the dollar blasts off and does what it did back in September of 2022. And when the dollar blasts off, everything else goes down because you need the dollars to pay the debt. And guess what? The next cycle, you know how much more debt there's going to be? You know how much more dollars are going to be needed? So it's going to be really weird. It's going to keep getting weirder cycle after cycle. Hope that helps. DCA man, first time getting in the live stream. Yes, indeedy. Welcome, welcome. Always a pleasure to have new folks. We're always here. We've been here and we will continue to be here. How can you adjust your investments cash flows when it can be vary a lot to the upside or downside? Just adjusting your expenses. I want a calm life. Yes. So expenses are critical. Uh, we're not. This stream is not in the business of that type of financial advice. Like spend less than you make. Don't take on excessive debt. Should you be buying a house with an 8% mortgage? We're not. What's his name? Ramses. We're not. Why do you have 50 grand in credit card debt? No, we're not. We're not. Spend less than you make. You have to spend less than you make. uh, You know. So that's how you adjust to get to a position of comfort, and then you spend based on what you have. And if you don't have enough, you can't have something. Now, as much as that's complicated, certainly from like a food perspective, I think often from a parental perspective, when I'm at the toy store, the Target, and we're in the toy section, sweetheart, you can't have that. Can't have that. Maybe you shouldn't have moved out. Maybe you should be living with two or three roommates. Maybe you should have gotten that car that cost $300 a month instead of $800 a month. Maybe college wasn't a good idea. These are some pretty hard statements, but I think often as a parent about these things, especially the schooling thing, maybe what most people do isn't a good idea. Just saying, food for thought. So spend what you have, not what you want to have, and then attach to the markets and let the markets do what they're going to do. And we'll keep doing this stream, and there will be discounts, there will be investments, and it won't be frantic. It won't be bonk and whiff and all that bullshit because that stuff is insane. And that's okay. There's people that can navigate that, but I don't need to. I have very reasonable expectations, and I will achieve what I'm looking to achieve. And my expectations will not be to turn 100 grand into 100 mil, 50 mil. I don't care. I don't need it. I don't want it. I don't want the drama. I don't want the complexity. I don't want the reporting requirements. I don't want any of it. So take a second look at everyone at expectations. Set reasonable expectations, and reasonable expectations are much more reasonable to achieve. Hallucinians in the house, a pleasure. Talk about Ramses. Do you think it's still a good entry point? Oh, no, no, not necessarily. I mean, these are some cheap numbers, 0.003, 0.008. So four or 500% off the bottom. I don't know. And I don't know where it's heading. So I'm able to take a position size because I calculated XYZ and I calculated it to be productive. I'm also capable of watching positions go to zero, and that's okay. So that's important. The smaller the portfolio, the more concentration you need to have, and the greater risk you need to take. So it's a complicated equation that's inversely proportional to portfolio size. I think it's an interesting protocol because of Arbitrum. Arbitrum and Solana have the greatest amount of liquidity outside of Ethereum mainnet. We'll see how the market cycle ends. End of 2024 should be interesting to reassess total liquidity composition of the markets. But as of today, there is the most opportunity of every market on Ethereum mainnet with almost $74 billion. Arbitrum with 2.36. Optimism is microscopic, relatively speaking. Avalanche is getting there, 1.3, which reminds me probably about Polygon, 1.4. Phantom, microscopic, but interesting. And then obviously you have Solana, which is 2.3. So the two largest markets, stablecoin wise, is Arbitrum and Solana, other than mainnet, which means the most potential price action, the most potential activity is on those L2s or alt L1s. That is the way it is quantitatively. Follow the stablecoins, follow the money. That's where the most opportunity will be. This chart, this data right here is literally cross-border flows. You have to think of these crypto markets as separate nation states. And these L1s and L2s as separate nation states. And there's different risk profiles associated with nation states, but think of these as nation states. Why not? It's what makes the most sense. So the nation states with the largest amount of stablecoins clearly indicate they're the most comfortable place for stablecoins. That's why mainnet has the amount of capital it does. This is where the most capital is the most comfortable, and that means a lot. So hope that helps, DCA man. I do have a high opinion of Arbitrum. I would like to see original solidly, the most recent incarnation, do well. It has more of a cross-chain capacity, and it's number one on Phantom. It has a lot of potential. It's underperforming. It's not very cash flow positive at all. In fact, it's not productive at all. But I think it would make most sense. So from a spec bet, it's one of the smallest positions I got, at least the position price point I acquired it. And pretty much it's tied to an Andre type narrative. I mean, it is the most productive exchange, foreign exchange on Phantom, 1.53. Excuse me. With literally 1.47 mil in TVL, yet 2.26 mil in volume. Very interesting. It is the leading experience, one of the leading experiences on Phantom. From an Arbitrum perspective, it's not really making waves. You catch up though. See, that's the thing. It has incredible transaction efficiency capacity. So what Seraph has done is certainly technologically meaningful. 3.85 is crazy, which means it's integrated into DEXs, it's integrated into power swaps, so on and so forth, 1 inch. So it's getting that volume, and it's attracting that volume because of the swap efficiency. So that's a big deal. I often say the greatest tech isn't always the greatest investment. It's not productive at all for liquidity providers, but certainly not from a cash flow perspective. There's no vote rentals, and the cash flow doesn't accumulate or get distributed to owners as it does with alternative solidly implementations. This is much more productive from an XYZ perspective. But I don't come into the conversation biased, like that whole banter back and forth between solidly and the E33s. They're going to banter all they want. Everyone's going to want the best protocol. So what I do is I inspect objectively. What are they offering? What is available? What am I getting for it? What is the XYZ calculation? and that takes the emotions out of it, hopefully. Do you think TradFi ETF credibility of BTC would decouple it from a raise all boats narrative? Yes, to a degree. Raise all boats still is applicable, but it is potentially the case that Bitcoin outperforms significantly. And that is the reason why I adjusted the cash position from Ethereum to Bitcoin. Marginally, it's still, I still have what I need with regard to Ethereum to engage in transactions and have exposure to Ethereum price action. But that is an interesting thought that certainly goes through my mind. ETF flows are changing the equation in a very meaningful way. DCA man, you're very welcome. If there's any further questions, otherwise we'll wrap it up for today. Um, Anything else in the charts that look interesting? I have my eye on Spell from a cash position perspective. I would love for it to be more significant from an investment perspective because I love stablecoins and I love CDPs and I love credit. It just doesn't hit everything I need. It's the cash flow isn't there. It's relatively high market cap. I mean, that I could be totally off with regard to using the market cap as an inspection. 200 mil market cap becomes, I mean, a top protocol, top 100 in 2025 is probably going to be 20 bill. It was single digit billions in 2021. Why can't it be double digit billions in 2025? So we'll probably see big double digit billions in the top 100 market cap, which means there's probably 100 X's sitting around, a lot of them. So I like it from a cash position perspective. It's very much off its lows. So it's not something that I would buy, but fortunately, this is cash flow because Abracadabra rents is one of the biggest renter of votes to finance the liquidity depth, which they absolutely require because they are a stablecoin business. Hope that helps. Why not borrow against ETH or Bitcoin and use those stables for egg sandwiches? I don't do leverage. That's why I keep the collateralization ratio conservative and sleep well. Why use stablecoins and miss the upside of the Bitcoin or ETH collateral? Yeah, I don't have any stablecoins right now. This is not stablecoin season. This is when stablecoin season is when after Move crashes and Move starts to blow to the upside. There's my Move indicator somewhere around here. I mean, this Move needs to find a bottom. Then you're starting to think about stablecoins, dollars. Bonds need to figure out what the hell they're going to do. They need to top. Or I don't even know. They could decouple, and things have been inversely correlated and have become correlated, which is so weird. So that's the weirdness, the fiscal dominance that Luke Groman and Lynn Alden talk about so very well. And what Brent Johnson talks about, you literally see yields fly with equities, fly with crypto, fly with the DXY. So that was a very interesting series of events that they've described over the years that would cause such a scenario. And I see that as quite reasonable. But DXY will rip to the upside, and then you're talking about stablecoin. So it's not hallucinating. I don't give a shit about the leverage on if the cash is Bitcoin or Ethereum denominated. I don't care about the leverage. I want the Bitcoin stable, spot, cold storage, Ethereum, same thing. It's cash. I need that cash. That cash finances my life. So I need that cash. It's your savings account. I'm not leveraging my savings account. And when I say savings account, think in terms of your bank account. That's what that is. You need to stop thinking about crypto as some weird kid shit and start thinking about crypto as business, as nation states, as investments versus cash, as bank accounts, as real life stuff. And the more you do that, one, the better you're going to do. Two, the better you're going to sleep at night. And three, the better stories you're going to have to tell when people ask, what are you doing in the crypto space? Because it's not bullshit. This is real business. And it's very much akin to what nation states have done with money and currency through history. Um, Last couple of questions. What do you think about Aurelius, a CDP with a money market integrated in Mantle? No interest. Um, There's so many networks. Get another mantle. CDPs are cool. Liquidity. Follow the money. This is where the most opportunity is. So you go to all, and I'll give you this. Follow the money. No, no, that's volume. I'm sorry. Follow the money. Stablecoins. Let's go to DeFi Llama. It's just a tremendous amount of data here. Follow the money. This is where the money is. If you follow the money, you'll find the money. Hope that helps. What do you think about using UDV3 pools as a way to automate the DCA in and out process? That's great from a cash management position. You're able to DCA in and out to a degree. I don't have time or patience. Who said it earlier? Calm life. Anna said wanted a calm life. So I don't care. I don't care if I can make more by playing around with LP positions and DCAing. Maybe if I'm going to DCA, I'm going to use CowSwap and use their TWAP system. But I'm more interested in just understanding the structure of the market, the secular nature of the market, and the cyclicality of the market as it plays out over the secular trend. So there'll be a time when you cycle out from an FX, a foreign exchange, your cash position, from many denominations, from cash, from gas tokens, and money instruments, assets with moneyness properties into dollars, stablecoins, and that time is not now. We'll keep talking about that time. So follow Twitter, follow YouTube, and I thank you all for joining me on a Monday, March 4th at 12:41 p.m. 42 people made it to the end of the stream. I thank each and every one of you for joining me today. Together, we could do a little bit better. Tell everyone to subscribe. Link in the description for the most rational community in the entire crypto space. I thank each and every person in there, and I will see you guys later this week. Peace.